Hey guys, we're going to be diving into the travel industry today and see if Air Canada is a good stock to possibly add to your portfolio right now. As we've entered July, we are starting to see some travel patterns appear. Are people traveling internationally? Is there a lot of domestic flights? Or are people mostly taking road trips? And ultimately, Air Canada hinges on people taking flights, whether it's domestic or international. And looking at the stock right now, we're still about 50% off from the previous all-time highs, which is why I'm interested in looking at Air Canada right now. Is it a good time to continue adding to this position, or will there be some short-term headwinds with the stock going forwards? If you guys are new here, my name is Daniel, and here on this channel, we talk about stock market investing. And in this Monday series, I always go over my TFSA portfolio, so I'll be sharing that at the end of this video, what stocks I bought and sold this past week, and also what I'm planning to do next week. So stick around for that if you're interested in checking out the portfolio. If you guys haven't already signed up for Wealthsimple Cash, it's a quick and easy way to send money to your friends, as well as using it as a bank account to earn some better interest than your typical bank account. If you open up an account today, you'll get some free cash, so check that link down below if you haven't done so yet. Now let's cue the intro and get right into the content. Here in Yahoo Finance, you can see Air Canada stock. The ticker symbol is AC.TO. Currently has a market cap of $8.66 billion. And if we look at the 5-year chart, we can see that the stock peaked around $50 per share last year or 2 years ago in 2019. And we're about halfway back up to the previous all-time highs. Now, if we look at their cash flow statement, you can see here in 2019, they had some massive cash flows, $3.6 billion, compared to 2018 of only 4.98. Also, if we go to the income statement, we can see in 2019, they had a $1.4 billion of net income. And in 2018, it was only 167. So here we can see that from 2018 to 2019, they dramatically increased their business's efficiency or just ability to produce cash flow and net income. And in 2019, if we look at how the stock performed, here you can see in December 2018, the stock rose from $25.96 all the way to $50 in a single year. So this was Air Canada's crazy good year of growth. However, what's interesting here is you can see the volume during the coronavirus, and when the whole pandemic was happening, there was a lot of trading volume in Air Canada. It seemed like the volume of shares were about 2 to 3 times higher than what they were pre-pandemic. So either people were trying to get out of their investment or trying to buy into it because the shares were so cheap. However, with that volume, we still have not seen the prices return yet. So let's dig into why. So the first piece of news I want to highlight here is that we're slowly coming out of the pandemic. So we can see the stock price is starting to recover from where it was last year when everything was completely locked down. We can see that Ottawa is easing their borders for fully vaccinated travelers. This means that fully vaccinated travelers who are permanent residents of Canada will no longer have to quarantine when entering Canada. So this is a good sign for people who want to travel abroad, and when they come back, they don't have to pay those ridiculous fees for hotels. You're paying like $3,000 for a 3-night stay at a maybe 3-star hotel. This is stupid in my opinion. But I guess Canada's got to keep their hotels afloat somehow instead of bailing them out with taxpayers' dollars. So rather, they take those people who can afford to travel in this time right now and make them pay a hefty fee. So this is a good sign for Air Canada as it's loosened up restrictions for traveling. If we turn over to another article here, we can see that Canadian flight bookings are amongst the lowest levels in the world. So this is a negative sign for Air Canada because Air Canada flies in and out of Canada, and they're the predominant airline servicing airline customers who are flying in and out. So if you're a short-term trader for Air Canada, this might not look good for you as there's still a lot of short-term tailwinds. However, there is some good in all this, showing that countries are recovering from the pandemic and people are willing to travel elsewhere. So eventually that trend should come back to Canada, and that will ultimately boost Air Canada's stock price. There was a report done by MasterCard saying that 20% of the 32 countries included in a survey have seen domestic flight bookings return to at least 90% of pre-pandemic levels. Meanwhile, Canada has had some of the lowest travel levels in terms of domestic international and business travel. US, Australia, and France are actually exceeding their pre-pandemic domestic flight bookings. So this is actually news to my ears, and actually I'm kind of blown away. But then there's us in Canada here, or in Thailand, or in New Zealand, which are at a fraction of where they were before the pandemic began. Domestic flight bookings in Canada as of May 21st were 28% of pre-pandemic levels. That's about 1/4 of pre-pandemic levels. So we're not doing so hot here in Canada. And the corporate flight bookings were only 14%. So this might be worrying because corporate flight bookings made up a large amount of travel. And potentially we may see corporate travel not come back to pre-pandemic levels because companies realize they can get the same stuff done through Zoom meetings. But I think in-person meetings always trump online meetings. I personally hate online meetings, and just you can't get the same feel or the same vibe with people because you don't get to see their body language or just chat with them individually. You're all in one room here. So I think that still a lot of business will eventually go back to in-person, but there is going to be some business that is lost, and it's just going to be all done through Zoom meetings. Now, there is also some other worrying signs out there, just like the Delta variant surges, outbreaks return in many parts of the world. We can see in Europe, countries are slamming their doors shut once again, with quarantines and travel bans. There are also countries like South Korea and Israel who pretty much got out of the pandemic. They're starting to see new clusters of disease that have proliferated. The Chinese health officials in China announced on Monday that they would be building a giant quarantine center with up to 5,000 rooms to hold international travelers. And Australia has ordered millions to stay home. So you can see that the Delta variant is making its way around the world right now. So potentially we could be in for another shutdown if this variant can't be stopped. And ultimately, this is also a risk to invest in Air Canada right now. So while there are borders opening up in Canada and the friction is a lot less for people wanting to do international travel, we can see that Canadian flight bookings are down, as well as this Delta variant presents a risk to the world shutting down once again. But there is also an analyst who wrote in this article that Air Canada could come back even stronger than before. His thesis is based on looking at some of the other markets in the world that are open. The trends there are seeing very good bookings. And the analyst also believes that people are wanting to go back to air travel. And I'm pretty sure your friends and family, my friends and family, they're all talking about their vacations in 2023. 2022 vacations, you're not going to be booking those anymore. Whatever's done is done. But everyone's looking forward to next year. That's also assuming that most of the world's vaccinated and therefore maybe COVID is eradicated and people can get back to their normal lives. And with all that pent-up demand that happened in 2020 and throughout 2021, people are going to want to travel maybe 2, 3, or even 4 times in 2023. That's just because people may have saved up vacation before, they saved up a lot of money, or they're willing to even take no pay leaves in order to travel and make up that missed time that they had in 2020 and 2021. The analyst also states that business travel is maybe a bit of a question mark. And she believes that when some companies are setting the precedent to start traveling again, it's going to be hard for other companies not to match that. So if your competitor is sending out salespeople to meet with people in person, those meetings obviously are going to be a lot more effective because you can show, you can talk, you can take your clients out for dinner. Then the companies who are a little less willing to send or fork up dollars for traveling, they're going to have to match their competitors who are doing this. But it's going to be gradual. And even just looking at the stock price like we did earlier, the analyst says it's interesting because a lot of stocks that are in these early cycle plays are way higher than they were pre-COVID. And yet their earnings really haven't recovered. So a lot of businesses out there, yes, their stock prices have risen a lot higher, but their earnings have not yet matched what they were pre-pandemic. So what are investors seeing? Maybe it's just investors want to put their money somewhere instead of in a bank account because the government continues to print cash. But they haven't yet stuck their money in airlines. So potentially, airlines may be the next thing to boom. But now with people working remote, people are able to travel as well as work at the same time. During the day, maybe if they're in Florida, they can work at their Airbnb, and come 5 o'clock or so, they can go out and enjoy a different country or a different setting. So being able to work anywhere in the world and being flexible allows people's travel plans to open up and even do more travel each year. And prior to COVID crisis, Air Canada was really executing very well on a lot of the company's specific things. And also we looked at Air Canada's financials prior to COVID. They were becoming a really strong company. They were executing very well on a lot of the company's specific things. They were generating massive cash flows. They had a crazy boost in net income. And I think that if management was able to do that pre-COVID, they can do that post-COVID. During COVID, it's a little bit of a different story. So with all that being said and done, for me, my long-term outlook on Air Canada, this is at least a 3-year play for me, so I'll be buying and holding the stock. Even at $25, it's still interesting to me. And in fact, this past week, I did buy some Air Canada. Now jumping over to a more technical chart, we can see that there's a bit of a support trend line happening right here. And Air Canada just hit that recently. So I think that buying in right now to Air Canada may be a decent play based on this trend line here. And it's held fairly solid over the past 6 to 7 months. We can see that it touched 3 times in total, and it's just touching right now. So even if you're a short-term trader, maybe you can catch a swing trade on this, where I'll bounce off this trend line and go back up. However, there's also another pattern that you should be aware of, where I see there's a bit of a head and shoulders pattern. So here's the first shoulder over here, then there's a head that spikes up higher, and then we just had another shoulder. And a head and shoulders pattern in this formation usually is bearish. So if Air Canada does break below this trend line, then we might see it return back down to around $20 per share. And at that point, I'll probably be loading up on Air Canada, just because I think this business, the Canadian government just cannot afford to have this business fail. So that's pretty much all I wanted to talk about for Air Canada. And let's jump right over to my portfolio and see what happened in this past week. Here you can see the total change in my portfolio is 0.56%, versus the TSX is still up 6.6%. So I guess you could say my portfolio is not doing as well. However, I'm not in this for a short term. Again, this is a long-term portfolio for at least 3 years. Now, if we were to invest in the index versus buying what I bought in my portfolio, I am currently down $271.90 versus the index, or 5.1%. The total value of this portfolio is $5,056.09. And when I started, this portfolio was only at $2,000. You can see the breakdown of all my positions here, the stocks that are dividend stocks versus no dividends, the risk that I have assigned each stock, and how much high, medium, and low risk stocks I have, as well as sector weightings. Now going over the transactions tab, we can see what I bought this past week. So I bought 1 share of Air Canada on the 28th at $25.22, and I also bought another share on the 29th for $25.41. I continued to add to my DCM position 20 shares at $1.48. And then I added 1 share of RioCan at $21.94. And lastly, I bought 6 shares of the Bitcoin ETF at $6.13. In addition to all these buys, I also received 2 dividends at the end of the month, one from Sun Life for $1.65 and one from TELUS for $3.16. Total dividends collected this year so far, $14.96. Now looking at the entire portfolio and what happened in this past week over here, let's sort this performance. We can see that Well Health was a major winner, up 8.21% in a single week. We also have Kinaxis shooting up 3.28%, and I guess Stella Jones, I don't own the stock anymore, but it was up 2.73%. The biggest losers was DCM at down 4.05%, and the Bitcoin ETF down 3.45%. One thing I do notice about the Bitcoin ETF is that usually on Fridays it's actually down significantly, but in the middle of the week it's at like $6.50 or $6.70. So this pattern I've been noticing for the past 3 or 4 weeks. So if you guys are looking for a swing trade or a very short-term trade, potentially buying Bitcoin at the beginning of the week and selling it midweek is a decent play to get into. If we look at overall return and sort the stocks based on this, we can see that Kinaxis is now the biggest winner in this portfolio, up 13.44%. Then we have Well Health Technologies trailing shortly behind at 13.15 and RioCan at 10.88. The biggest losers, again, the Bitcoin ETF, down 20.47%, not as bad as before actually, and then GDMP down 11.52%. Now, typically the way that I like to buy stocks in my portfolio is looking at the current market value and seeing which positions that are a little bit underweight, if I should boost them or not. So looking at this coming week, the stocks that I plan to buy, potentially I'll be adding a bit more to my RioCan position, as it's a fairly low percentage of my portfolio, only at 4.39%, pays a decent 4.35% dividend, and it still has not yet reached pre-pandemic highs. Looking at their stock chart here, pre-pandemic is trading around $27.67, and right now we're at $22.18. And last week in my video, I stated that RioCan was still collecting a solid portion of the rental income, about 94%, but the stock is still down by 19.35%. I may also consider adding to my Algonquin Power Corp, as it's still below my current cost basis per share at $18.55. There have been a few headwinds with the stock, including a recent capital raise where maybe investors did not look favorably towards them selling more shares in order to raise capital, as well as they haven't fully yet recovered from that Texas power outage. But overall, the stock is in a renewable energies category, and this is the future in my opinion. And also, of course, we can't forget Air Canada, the stock that I just talked about earlier. This is a 3 to 5 year play, and I believe that this stock could yield me at least a 100% gain going forward in the future by 3 to 5 years. The government has proved time and time again that they can't really let this company fail. It's a very important part to the Canadian economy, as well as just keeping businesses running in Canada. So ultimately, I think Air Canada will be another stock that I continue to add and boost my position in this week, as it's also down from my cost basis per share. And if I have any money left over, I will continue to add to my DCM position. Hopefully I can pick up some shares at $1.36 per share this week. Just over the past couple of weeks, this company has seen major stock price appreciation, and therefore I think there may be some investors looking to cash out for short-term gains. And that's where I'm hoping to pick up some shares a little bit cheaper than $1.42. But beyond that, I don't know if the stock, or I don't think the stock will actually drop below that, just because of how solid the cash flow is coming in from this business. They've proven that they're able to repay debt. They have a new CEO, and the business is moving forward to a digital platform versus the traditional print business that they were known for in the past 65 years. If there are any other great stocks out there that you think that I should add to this portfolio, I'd love to hear your comments down below and give me your reasons why I should check out that stock. I'm keeping this portfolio only to Canadian stocks, so please only suggest those, as it's not worth it for me to buy American stocks in Wealthsimple right now. If you guys like this video, remember to leave a like down below, as it greatly helps with this channel. I'll be throwing up 2 videos on the screen after this. If you're there, I'll see you there. If not, keep up the grind and have a great day.